All right. I wanted to thank you all. Thank you for joining us. It's an honor and a pleasure to moderate this panel with two very distinguished participants who can help us shed light on how the current oil price environment is affecting NOCs in Latin America. Allow me just a couple of minutes to present a little bit of the context for this discussion. The industry has shifted to an era of abundance in which there is more capital available than profitable investment opportunities in this low price environment. This has affected perceptions of value creation with capital discipline and profitability prioritized over resource access and growth. Low oil prices associated with this era of abundance are placing severe pressure on companies and countries alike. Under such strain, countries are concerned first and foremost with financing budget and current account deficits. The implication is that easing contract terms to attract investment can be a lower priority in many cases. This is not to say that opportunities for NOC-IOC partnerships will not arise, but as IOCs prioritize cost control and improved execution, they will be more selective in what is ultimately a global competition for CapEx dollars. Latin America offers very attractive investment opportunities. In Venezuela's Faja Orinoco, Brazil's pre-salt, Argentina's Vaca Muerta, and likely the Mexican deep water. But it is not immune to the impact of low prices on the industry. And even before the price downturn, countries in the region were also facing growing competition for investment as Mexico began to open its sector. So the goal of this panel is to illuminate the case of Latin America by focusing on two prominent NOCs in the region, YPF and PDVSA. Three questions will guide this discussion. First, what is the impact of this era of abundance on the region? Second, what types of adjustments and policy measures are Latin American countries and companies taking to cope with low oil prices and to boost investment in their sectors? And three, what are the implications for foreign investors? And without further ado, I would like to ask Daniel Gonzalez, the YPF CFO, to provide a few remarks.
Well, thank you, TJ, and thanks to EI for the opportunity of participating in this panel today. While you were talking, I was making a couple of notes regarding this era of abundance, which I have to say that has not reached Argentina, not yet, at least. A combination of inadequate policies towards the sector and some macro restrictions, both from a political as well as an economic point of view, has resulted in significant underinvestment and for over a decade, and the subsequent reduction in oil and gas production that actually transformed Argentina from being a net exporter of hydrocarbons to being a net importer of hydrocarbons. This has started to change in the last couple of years, and I'm going to go through in a minute what is it that we at YPF are doing about, and what is it that the government has been doing about it. But in an economy which is heavily leaned towards fossil fuels, where gas alone represents over 50% of energy consumption, and a quarter of that natural gas is actually being imported, mostly in the form of LNG, you can understand that clearly that is a situation which is not sustainable. That's how we, the NOC, fit in. I think differently to what you probably visualize as an NOC. The government is not looking at us as a source of income. Actually, we do not pay any dividends. The federal government take is actually zero. We only pay income tax at the prevailing corporate tax rate in Argentina, as everybody else does. We do pay some provincial taxes or royalties, but at a federal tax, nothing. And that's why I believe they look at us more as a way to transform ourselves in the engine of growth that the sector needs in order to return to self-sufficiency. YPF is a publicly traded company where the state owns 51%, but we publicly trade both in Buenos Aires and in New York. We have a professional, independent management in place. I don't know if good or bad, but we are clearly not government officials. We are a fully integrated company. That means that we process 100% of the crude that we produce in our own refineries, and the way we monetize that crude is by selling fuels locally and to a lesser extent internationally. We've been growing pretty dramatically in the last couple of years as a consequence of a significant turnaround. We have increased our production by over 20% in the last 2.5 years. We have increased reserves by closer to 25% in that same period. We believe we are very good at operating mature fields. We've been doing that for almost 100 years. 40% of our oil production actually comes from secondary recovery. Still, the recovery factor is in the 20s, actually around 20%, so still plenty of upside over there. We have renewed our focus in natural gas production, mostly in the form of tight gas. Tight gas currently represents 12% of our total gas production today. Now, how have we managed to provide this kind of growth, especially the last year or so under this global oil price environment? Well, basically, we have slashed the dividend. We are reinvesting significantly all of the cash flows that we generate into the business. We have been increasing leverage a little bit, still maintaining a very disciplined, very sound capital structure. We have a target leverage ratio of 1.5 times debt to EBITDA, which we hope to maintain. We have been investing a lot in the shale, making significant inroads. Still, it's a very small percentage of our production. It's probably 2 or 3% of our oil production, but we have drilled over 400 wells in the shale in Vaca Muerta in the last 2.5 years. Always with partners. Largest partnership is with Chevron. We also have partnerships with Dow Chemical, with Petronas, and we're working on a couple of others. I believe we're still scratching the surface, although we are the largest shale development outside of the US. We are currently producing approximately 50,000 BOEs a day and growing. But the other reason why we have been able to keep activity pretty much where it is and not having to reduce CapEx, at least not this last year, and we've been able to keep our EBITDA pretty much flat in dollar terms, has to do with several measures that the government has been taking in order to promote the industry. It started with a new gas regime by which the price for natural gas was increased to $7.50 per million BTU for all the new gas being injected into the system. This is 2.5 years old and actually has made most, I'd say all of our gas projects really profitable, and it's the basis behind why we have been able to focus or refocus this much in natural gas. Then a new hydrocarbon law was passed a year ago, which provides for more visibility in terms of the concessions with the provinces and the mechanics for renewing those concessions. It has provided more stability, fiscal stability, also coming from the provinces. It has provided certain benefits for specific projects that allow companies to keep proceeds from exports free of export taxes outside of the country. It's only 1 year old. We believe it will have significant impact in the investment going forward. Recently, there was an incentive put in place of $3 a barrel for all those producers that can keep production above last year's levels, and we've been fortunate enough to get that incentive in the second and third quarters of this year. And finally, the government has also supported local prices to be higher than international prices. Crude oil in Argentina is currently trading in the 60s, in the mid to high 60s as we speak. And the reason why I believe the government has done that is that they've been focusing more in protecting their current account, and they believe that fostering local production that can initially replace imports and in the long term significantly increase the possibility of exporting oil has actually had very good results. Now, of course, if price of oil goes up another $5, $10 in the next year or so, they will be proven right as a very smart counter-cyclical policy. If, on the other hand, price of oil goes down another $10 or $20, it'd be more difficult to sustain this kind of policies in the long run. For the future, I think what you can expect from us is continued growth, moderate growth probably in the short term, given the capital restraints generally worldwide. More focus in natural gas, as we said, continue to develop the unconventionals, maybe at a slower pace, but the development projects that we have ongoing in Vaca Muerta actually are at an acreage that represents only 2% of the total acreage for Vaca Muerta. So if we have proven that the resource is clearly there, we have proven that we don't have infrastructure or any real roadblocks. Now what we need to prove in the near term and in order to put this in value for the long term is that we can do it economically, that we can continue to increase productivity, that we can continue to reduce costs. So to the last question that TJ was asking, what does it mean for investors? I think we are an entry point, a good entry point into Argentina. We have different ways to invest in YPF, both in the public markets through our equity and our debt, but also in the privately through partnerships. But we are by no means the only entry point. We are the largest company in the country, but we only represent 40% of oil and gas production. So there are another 50 producers in Argentina, and I'm sure that they're all looking for investments.
Great, thank you so much. Domingo, would you like to?
Good morning, everybody. Thank you for the opportunity to be here after several years, almost 12 or 13 years without to be present in an event like this, okay? Today, I want to provide you some information about PDVSA. As you know, PDVSA is producing almost, or right now, 3 million barrels per day. And we are focused to increase the production, to double the production. And our planning is to double the production in the next 5 years, for the year 2019-20, to reach 60 million barrels per day. And how we can do that, this is the work that we are doing in order to achieve that. For the moment, I can say that we have the support of 44 joint ventures with different partners, Chinese, Russian, American, Italian, European companies. And we are working together in order to push or to increase the production, mainly in the Faja. We spent almost 5 years working in the certification of the reserve of the Faja. The Faja, Hugo Rafael Chavez, right now we have 300 billion of barrels proven reserves. This certification was made during a period of 4 years with different partners and certification companies. And this permit to us to assure that we had proven reserves that with low source of failure risk. That means that we don't need exploration, we don't need appraisal campaign expense. That means that the cost to produce this reserve or the risks to have this reserve had been is not necessary to consider. Okay. The most important here is that we had a plan to increase the production, and right now we are taking in consideration some activities or some strategies in order to achieve that, and also how to accomplish according to the current situation of the price of the oil, and also the internal situation in the country. The government are taking some actions, and PDVSA also with the new president, Eulogio del Pino, we are also taking different actions. Mainly is to do the investment that we need to increase the production in the short time, and also to reduce the cost of production. The cost of production right now, we had the cost is around $8 to $7 per barrel. Was higher than that 2 years ago. And we expect that the cost could be reduced according to the strategy or the action that the government is taking. For example, the most expensive for us in the production is the drilling activities. Then we are taking some actions, like, for example, assigned to the joint ventures, the rigs, excuse me, the rigs, try to reduce the time to drill and complete the wells, and other activities related with the contracting of the service that PDVSA reserve at beginning for own effort, and right now we are transferring the rigs and the contract to the joint ventures. This is something that we are doing, and also mainly this is related with the operational activities, but also that we are doing related with the financial is that the government authorized to the joint venture that finance the project that the expense in local currency could be used through a new exchange rate. The exchange rate is a new exchange rate that we had in the project, and then the companies could get the local currency to a higher rate than the official rate. Then, with this action, the cost reduction is almost 30%, and also the dividend that the joint ventures could get is almost 30% increase also. We hope that these activities and this action could help to the companies to keep in the projects and to do the investment that is necessary for the near future. Also, we are taking the advantage that right now we have a surplus of the light oil in the market, and as was planned in the development of the Faja, we had a period of time where the projects produce as we call early production. The early production will permit to the projects to get the support, the finance support, to fund the future activities. The future activities mainly is as we produce extra heavy oil. The extra heavy oil need to be upgraded, refined. Then the investment required to build the upgrader is a huge amount. Then the early production could provide the fund that is required for this investment. Then all the strategy is put in operation the early production. Right now, the new projects in the Faja is going to increase the production from, at the end of the year, will be producing near 100,000 barrels per day. And with this production, and we are taking also additional action as consolidate with several contractors the drilling activities on their master contracts to increase the production in the next 2 years for the new projects, 400,000 barrels per day. Also, we are agreements with the Chinese for 5,000 billion of dollars, excuse me, $5 billion of dollars to increase production with the Chinese projects and also to build surface facilities to handle up to 300,000 barrels per day in the next 2 years. This will permit to us to handle the short time increase of production in the Faja and support the early production, as I told. Also, the action that the government and PDVSA is taking from 2 or 3 years ago is to get the finance from the joint ventures, the partners. And right now, we had $70 billion of dollars provided by the partners to support almost 1 million of barrels per day production. This support is in the Faja, also in mature fields. With the mature fields, we can assure almost 700,000 barrels per day. Then, we believe that with the action that we are taking, we could assure we could achieve an increase in the production in the short term. Maybe it's not the total amount, but we are taking, or we are sure that we are in the right road, okay, to achieve that.
Okay.
Thank you.
Excellent. Thank you very much. I appreciate both of your comments. We have about 13 minutes for question and answer. I'll ask a couple of questions, but then we can move swiftly onto the audience for questions. First, starting with Danielle. I wanted to clarify with you on the new hydrocarbon law. It sounds as though there have been a lot of steps through the hydrocarbon law to encourage investment. It's beginning to have some impact. I was wondering if there are certain aspects that still may be limiting to YPF and maybe constraining it from meeting some of its key operational goals, or do you see this as a positive step?
I believe from a regulatory perspective, there are no restrictions that we feel as a constraint. Obviously, the hydrocarbon law came in I think it was October or November of last year, so right in the middle of the collapse, the first few months of the collapse in global oil prices, so probably not an ideal moment in order to pretend that we would foster investments right away. I still believe it's a great regulatory tool for the long term. I think if investments have not been higher than the ones that we've had, do not have to do so much with the regulatory framework, which I believe it's adequate, and probably more with what I just described regarding oil prices globally and global oil companies reducing capex all over the world. And second, of course, with the macro in Argentina and the political changes expected. We have presidential elections coming in a couple of weeks. So I think there's a lot of people more on the sidelines waiting to see how that plays out. And again, I haven't sensed that the law is lacking any regulation that people were looking forward for.
Okay, thank you. Domingo, I wanted to ask you a question related to the economy. Because we know that Venezuela has been one of, if not the worst hit countries among major oil producers in the latest price downturn, and a lot of that was because the economy was already experiencing pretty significant trouble before that. So I just wanted to give you the opportunity to explain how the economic challenges are affecting PDVSA.
PDVSA had the structure for investment and operating costs. For investments, almost the 50% of the of requirement is for local currency. Okay, then we are affected by the inflation, the economical situation right now in the country. And the operation, the normal operation also, the local currencies is almost the 80%, 80%. Then the cost could increase dramatically with inflation. But the advantage is, as I mentioned previous, when we use a different exchange rate that in normal conditions PDVSA had been using, permit to access to the market with basically before to take the new decision of the exchange rate. When you go to the market with $1, you can get 630 bolívares. Right now, with $1, you can get 200 bolívares. Then the profits or the reduction of costs for the companies is dramatic. You can say almost 30% of the budget could be reduced because the local content or the local currency could be supplied by or could be obtained with less dollars. Okay.
Thank you. Daniel, I just wanted to ask you a question about partnerships. I'll ask two more questions and then we'll open it up to the floor. So in August, YPF said it was not seeking further partners at the time, at least partly due to the low oil price environment. But since then, we've seen that YPF and Gazprom signed a preliminary accord to jointly develop tight and shale gas resources in Argentina. So is this a sign that YPF is now seeking out partnerships?
Well, the comment actually you're quoting was my comment on an earnings call. I think what I was trying to say is that we're not looking imminently for partners because we had closed our last partnership a few months earlier, which was the one with Petronas, which doesn't mean that we're never going to be looking for partners. There's a lot of people always looking at our asset base. I think Gazprom is one example. We have a couple of other discussions ongoing. As we said, we will continue to develop the shale. We will continue to develop the tight. The question always is the pace. And we have decided from a strategic perspective that we want to share the risks, especially in the shale, and we're going to be doing that with partners. So far, we've done it in 50-50 partnerships. We like the structure. We've been operating those partnerships so far. It does not necessarily mean that we always need to be the operators. And I think that you will continue to see JVs coming out of YPF. Are we working on anything imminently that will come out in the next few weeks? Definitely not. And that was, I believe, the intention of my comment a couple of months ago. But the strategy has not changed. The question always is a pace.
Okay, great. Domingo, a question also related to partnerships, but also connected to the Orinoco, the Faja. What do you see as being the outlook for the Faja? I know that you said that your plans are to double production in the next 5 years. This is obviously going to depend significantly on partners. And how willing are partners to commit investment at this stage, especially in this current environment?
Yes. It's a difficult question. Yes, we are working with the partners. We had several years working with them. To increase the production, it's necessary to do. The problem with the Orinoco or the Faja Petrolífera Orinoco is that we are in the south of the country where the projects are located. We don't have sufficient infrastructure. The projects could solve the problems inside the fence, but outside the fence it's necessary to build a lot of facilities like pipeline, terminals, electrical lines. something that we call condominiums. Condominium is where the oil graders are located and all the services are provided by a third party. We believe that this is the best opportunity right now in Venezuela to build or to participate in projects, not necessarily in the oil sector directly. We are right now looking for investors to build facilities, to build a stripper, for example, that we need to, according to the strategy, we move the oil diluted with naphtha, and then we need to separate the naphtha for the oil. Then we need facilities, special facilities to do that. We need also the pipelines and storage capacity also. Then it's required a huge amount of investment from the partners, of course, and also from additional investors that is not necessary to be related with the oil. That PDVSA is taking an aggressive contact with investors right now in order to provide to them different alternatives to do business in Venezuela. It's possible to participate as an EPC contracts, as a joint ventures in, for example, electrical power supply, as a pipeline operators, and so on. It's a hard work that we are doing in order to find investors to complete all the facilities that we require.
Okay. Thank you very much. Let's open up to the audience for questions. We have anybody have questions?
Christina Katsouris, Energy Intelligence. I just wanted to ask the gentleman from PDVSA, blending heavy Orinoco crude is key to raising production, okay, in the region in the near term. You've been importing from countries like Algeria, but have you thought very seriously about importing condensates from the US for blending with the Orinoco?
Yes, it's a strategy that right now we are analyzing. As a third option, we are considering to use, as you mentioned, light oil from Algeria. But also we are considering, as you said, condensate. But it's something that we are studying at this moment. But are several negotiations that we cannot say at this moment.
Thank you. Thanks for the question. Next, please.
Hi, Peter McNally from Kingdon Capital. For Mr. Garcia, would you consider selling your U.S. refining interests to fund your upstream investments at this point?
You saw it coming.
No comments, no.
Anyone else have any questions? No? Anyone? All right. I can ask just one more question, or a couple more questions here. I wanted to also ask about the role of China and how PDVSA sees Venezuela's relationship with China, especially in the upstream and investment moving forward.
The strategy for PDVSA and the government is to change in some way the export of oil and the relation with the different actors in the world. The plan is to consider Asia, the Chinese, and also the Indian as the main clients. That means right now we are exporting to Asia almost $1 million barrels per day. And the plan is when we reach the maximum production, export to Asia 3 million barrels. the 50% of the production will be oriented to this market.
Okay.
And also, of course, the Chinese is helping us to build the facilities to provide finance and also provide some expertise.
As well. All right, I think that's about it. We're out of time, so I really appreciate both of you attending, and thank you for your comments, and thank you for your questions as well.